Okay, Jay, thanks a lot for joining us. Good talking to you as always. The Nifty is once again back below the 17,000 mark, and the real culprit today once again has been the Bank Nifty, which is down full 1% now. ICICI Bank, HDFC Bank, HDFC, Axis. Keep in mind, today is the weekly options expiry on Financial Nifty, which has started to generate massive volumes on Tuesdays. So that could be another factor playing out. Raunak Onkar is co-equity fund manager and head of research at PPFAS Mutual Fund. He's joining us now. Raunak, hi, good afternoon. Thanks for joining us. Been a very sort of resilient market, right? I mean, we tend to look at, we all have recency bias, but in a market in which the US market is at 52-week lows, our market is practically within just 7-8% of highs. But what have you made of the recent volatility, and as an investor, how are you approaching it?
So thanks, Anuj, Nigel and Prashant for having me. Good afternoon to all of you. So of course, yeah, the US market has been unusually volatile, but it should be expected because it has risen to quite a high in a very short period of time if we compare especially the last 2 years. So this correction has to be expected. Most interestingly, the trend of having free capital, cheap capital available to expand, any valuations were okay. That era seems to have come to an end in many of the businesses which could not have their own cash generation machines inside the businesses. In India, however, some of the decent companies which have been trending upwards are cash generating positive free cash kind of businesses, and over a long period of time have shown profitability. Some of those companies are still valued quite expensively, or I would say reasonably. But interestingly, it remains to be seen that there are some pockets where valuations are still attractive, and we have been adding them over the past few months.
All right. Hi, Raunak. Afternoon. Good speaking to you. Raunak, I'm looking at your top 3 holdings. A few months ago, ITC was in, top spot. Now it's moved to the 3rd spot. And HDFC and Bajaj holdings, well, they have moved higher. The top 3 stay the same, but the order has changed. Have you rejigged the portfolio a little bit, taken some money off the table on ITC, or the other way to do it is maybe you've increased your weightage on HDFC?
So portfolio allocation continues to happen. So ITC was very close to breaching the 10% mark, and we did not want one stock to dominate too much of the portfolio. So we trimmed that a little bit. So that's why the percentage allocation in ITC has come down. However, if you see the allocation to HDFC Bank, HDFC Limited, it's because we have moved from HDFC Bank to Limited owing to the merger. Essentially, if you see the banking exposure that we have is close to about 19% now, compared to what it was 2 years back, about 8 to 9%. So we have reached that portion of the portfolio. Bajaj Holding has been a long-standing investment for us. It's a bet on the underlying companies in Bajaj Group, which is Bajaj Finserv and the auto business.
Right. Raunak, for those who want to be a little opportunistic with regards to exposure to global equities, is this a good time? And what's the best vehicle to do it? I mean, you own some 25-30% of your portfolio is in global equities. But how are they looking? I mean, sure that you keep track of where valuations are, but I think your exposure is to very large mega tech names there, right, in the US. How are they positioned now after the fall?
Yes, so we own the larger tech businesses. The only distinction of the tech businesses we own is that they have their own cash flow generation capability, and they keep funding their own projects with their own cash flow. For exposure to international stocks, I think in the fund we have close to 20% investment right now. The overseas limit has not been opened yet for mutual funds to invest. So till the time the limit is there, we will continue to invest new capital in the domestic companies. But international piece is there because the valuations are attractive. There is no point in selling these companies. They're very good businesses with longer term trajectories. And if individual investors do want to invest globally, there is an option of directly investing through the LRS route. So that is one way people can expose themselves to the US market or global markets.
And what's the best kind of route to do that? I mean, with all that is happening in the NASDAQ, which is corrected so much, I'm sure people would want to know what. I mean, so mutual fund route is tapped out with the limit kind of full up right now, and we don't know when that will open up. But through the LRS route, what's the best way to do it, in your opinion, Raunak? And are stocks attractive? Go on.
So in mutual fund route, if you see the existing investments, if the fund is retaining an allocation, then you still get the exposure in the NAV, right? So the NAV does incorporate the values of the global as well as domestic stocks. In the LRS route, I think buying individual stocks is better, or you can also buy funds globally or fund of funds if you want to diversify the exposure. So that is one way of doing it. So there have always been these multiple options available. It's just that the mutual fund route cannot incrementally invest into global stocks, but the existing investments can stay in the fund and it will be a sizable allocation.
Okay. The other large holding that you have is Power Grid, right? And it's done well for you, Raunak. One of the few PSUs which did well. But, there has been a bit of a flip-flop on, the REC stake and, whether Power Grid will be told to buy, and then there's been clarification. But, do you get a bit disappointed with such sort of events? And I sort of going to keep the faith here in this investment?
So in PSUs, right since the beginning, we have this stance that all PSUs may be owned by the same promoter, but there are some PSU businesses which are actually run very well and they have a long legacy of good operating businesses. So in the past, we used to own the city gas distribution businesses in the mutual fund scheme. And this time we have Power Grid, Coal India and MDC kind of PSU businesses. So it's disappointing sometimes to see that there will be some policy overhang on these companies. And that has been the case. So it's nothing new in PSU businesses. This is one of the reasons why it's important to pick the right PSU businesses which might have a good trajectory of the underlying business. And over a period of time, you have to weigh the risks and your allocation based on what the policy changes might happen. So it's a constant tug of war, I would say.
Other bit I wanted to ask you about was on IT, because I think you have HCL Tech, which is in your both your schemes, and Wipro I think is also a reasonable holding in one of the schemes. So after this fall, are they looking attractive? Because the big debate is about valuations, right? That if the margins are back to pre-COVID levels, why should valuations not go back to pre-COVID levels? And valuations still are at about 30% premium.
So if you see the valuations of some of the larger IT companies, they have become more reasonable in the past few months. They have corrected. Probably the market anticipates a recession on a global basis, and which will affect the overall IT spending globally. But the way we look at IT companies, although they are attractive across the board, but some of the larger IT businesses which are more diversified, they provide you a lesser downside in terms of losing the business if something goes wrong with a few clients. Whereas in smaller or mid-sized IT companies, where the concentration of clients may be higher, or dependence on a few technology areas will be higher, or vertical will be higher, that might suffer if there is a significant crunch in revenue or IT spending globally. So I think larger IT businesses have been stable and they have consistently delivered over a long cycle. And there have been moments in between where the growth has stagnated or flattened out or even degrown in a few years. That cycle continues to happen. So we have to brace for all these cyclical events.
Okay, all right. Raunak, thanks so much for stopping by and giving us your view on a whole host of sectors as well as stocks. Looking forward to chatting up with you rather soon. Well, we'll be having that chat. The Nifty actually moved to the low point of the day, but it appears there is some bit of fight that's coming in at around that 16,960, 16,970 odd mark. Let's see whether or not on a closing basis we can defend that. But, a couple of stocks moved to the day's low when we're having the chat. Adani Ports has moved a little bit low. Ultratech Cement as well, that was trying to pull back. That's moved a little bit low. And L&T as well has taken a bit of a knock in the last few minutes. Well, we'll slip into a short break. As always, Nimesh will be waiting for you on the other side. He'll tell us what's going on in dealing rooms